Well, we're going to get rolling here this week. Volatility, it's probably an understatement, today, just what we've seen over the last week. But we just want to take a step back and give you a few things to consider. The first thing we want to go through here today is, boy, what a difference a year makes. I mean, a year ago, where we had prices on a number of commodities compared to where they are at today. I mean, the big winners in here are the crude oil market and the lumber market, as they are both up more than 300% from where we were at a year ago on this date. And then the Fed coming out and saying we really don't have inflation. I mean, that's just a little bit bizarre to me when you look at the rise in energy prices and construction lumber out there. Then after those two up on the top, you kind of settle back down, and here's some ag commodities and some big moves. I mean, the corn market's up 130% from a year ago. A year ago on April 27th, front month corn settled at 305 and a half. And in fact, it was on April 28th of 2020 where front month corn actually put its low in. And then we've been rallying, or we were flat for the first 5-6 months. And we've had the big rally from the fall now and in the spring of the year. The bean market, hog market have had pretty good gains as well, along with wheat. And I think the one thing is when you start getting to the bottom of the list, you've got the Dow up 41% on the year, which is a huge gain. But the gold market is only up 4%. And when we talk about potential money flow coming into commodities, and more specifically ag commodities, you can see where it has that story right now compared to where we were at a year ago. But I just think it's really good. Take a step back in here, acknowledge where we were at last year at this time and where we're sitting at here today, and the moves that we've had on these ag markets. Now I'm just going to get over to the corn market here. Here's the weekly corn chart going back to 2012, and we have some red horizontal lines. And I guess what I'd really like to point out here is from the first move when we broke above the 460, 465 area, we jumped about $1.10 a bushel before we flattened out after the first of the year, okay, and peaking out around that 575 area, and then spending a lot of time, okay, on either side of 550 for a couple of months. Now, when we got this last breakout over the last couple of weeks, corn has surged then, okay, about $1.45 a bushel, with today's high being at 720. I'm not saying today's high is it in here right now, but if you look at the 2012 high in the 840 range, I mean, this is about a 50% move from 575 to this 850 to kind of peak out in here at the 720 area. I mean, my take right now is you could easily see this thing move sideways for a little bit and set ourselves up in the spring and early summer. Do we break out higher, and then the 2012 highs would be that next target up about $1.25 or $1.15 from where we're sitting at now? Or does this market roll back down and we head back down to 575? U.S. weather, world markets will really help determine that. Now, as I go on to the next one, we always focus on the world prices and where U.S. corn is at compared to the world market. And I think there's a couple things here we'd really like to point out. The first thing is on U.S. corn has rallied over 70 cents a bushel from last week to this week, where the Argentina market was only up 52 cents. Ukraine corn was up about 27, and Romania's offers went up 40 cents. As you can see with this, the U.S. market is continuing to price itself out of the exports, okay? One thing, though, we would like to point out is U.S. corn compared to the cheapest offers out there of Argentina corn, okay, it still doesn't make economic sense for us to import corn into the U.S. So we may be sitting on an island that we're too expensive in here, but we really don't have to worry about corn working its way into the U.S. On the bottom of this one, we have Brazil corn, where Brazil is still not offering corn on the world export market. Typically at this time of the year, they will start offering some export corn for the August timeframe or August, September delivery. The fact that they're not offering corn is telling us that their crop issues down there are real, as there's just no comfort in sitting here and offering corn on the world market. We think that's one thing to watch. If Brazil starts offering corn out on the world market and it's below U.S. offers, it tells us that their crop is probably stabilizing and are going to look to be back into the export market, and we'll have some more competition at that time. As I get over to the bean market here quick, I mean, we broke out above those recent highs in the 1450 area. I mean, and it kind of jumped about $1.50, okay, and now right around $16. And if you go back to the 2012 high, just shy of 18, and you look at these recent moves, we tend to move $1.50 to $2 at a time. I mean, again, just like corn, you could see this market trade sideways in here, with front month beans in the $15.50 to $16 range. And as we go through spring planting, then it's going to really depend on what kind of crop conditions we have here in the U.S. and what else is being offered on a worldwide market. If we're going to challenge those 2012 highs, we think there needs to be some issues. We went through the corn side of it on the world market. Here we'd like to go on the beans too. As you can see, the U.S. market really rallied this last week, and the cash up about $1.10 a bushel. But we got the Brazil and the Argentina crops really following along, gaining 80 and 95 cents respectively. Right now, you're looking at U.S. beans being offered about $1 a bushel more than Argentina beans. Okay, that's still probably not quite enough to get some imports here into the U.S. When we look down on the meal side of it, U.S. meal gained $17 a ton, where you got the South American offers really jumping quite a bit more, up $22 and $24 a ton this past week. But do notice that Brazil and Argentina meal is both around $20 to $30 a ton cheaper than what the U.S. is offering right now. That's why our exports are going down to nothing. Again, we're not going to import it into the U.S., but to think we're going to get any sales off of this, we are really kidding ourselves right now. When I get over to the wheat market, I mean, we broke out above $7 on wheat and could argue maybe we could hit $8. That's a challenging market when you look at the charts in here right now, and the big bulls in the market will want to make an argument of wheat going up to the 940, 950 area, where we had our 2012 highs for Chicago wheat. We think the biggest challenge on the wheat market is when we look at it from a global perspective. U.S. hard red winter wheat's offered on the world market at $8.36, soft red winter wheat at $8.67. They jumped 70 cents this past week. If you look at German and French wheat, they jumped about what the U.S. was up about 70 cents. But all of a sudden you get into the Russia and Ukraine wheat, and Romania has the cheapest wheat on the world market. That was only up 35 to 40 cents. That tells us that they're pretty happy with their crop is. The other thing we need to really notice in here on the wheat side of it is you have Eastern European or Russian wheat down being offered in that 707 to 714 range, which is a full $1.50 a bushel below what soft red winter wheat is offered out of the U.S. Gulf. We are the first ones to admit over on the corn and the soybean side of it, where U.S. prices are too expensive to be competitive, but don't look for any imports. We're starting to get this wheat market a little bit too wide in here right now, where we could actually see some wheat moving from Russia or Ukraine, maybe into Mexico, or maybe even into the southeast U.S. This wheat spread on the world market is just getting way too wide, and the wheat market is probably a little overheated in here right now. As I look to finish up in here, I think the one thing we need to keep in mind is that we do have plenty of volatility, but we do have seasonals that tend to peak this market out on corn and beans. And if we're putting a high, and it's kind of a mid-May to a mid-June high as the crop gets planted, decent moisture, and we started off with pretty good ratings. Okay, if we get a breakout to the higher side, we either need some major crop issues on getting the crop in the ground, which seems unlikely right now, or we add a bunch of weather premium from the mid-June to the mid-July timeframe. My bias sitting here today is that this crop is getting off to a pretty good start. Okay, and if we catch some rains in here the first or second week of May, I think the crop ratings will be pretty high as we get into the end of May. When I look to get some coverage in place or what to do, I mean, with this volatility, I know options are expensive, but just budget some dollars and buy some puts. I mean, a D's 550 corn put at 50 cents, the $13 bean put at 60, and Chicago wheat, the $7 puts, before I came in here, we're at like 28 cents. So I just think with this volatility, I mean, budgeting dollars for some options isn't really the worst thing to do. As I look ahead and want to wrap it up here today, The one thing we got to do is this volatility will continue. But I think we also need to look towards the 2022 crop. I mean, D's 22 corn traded at $5 today. Nov 22 beans above 12. And you've got these wheat markets pushing $7 a bushel. Again, my long-term bias is that the world will not produce enough $3 corn. The world will not produce enough $7 or $8 beans, and the world's not going to produce enough $4 wheat. But having said that, I believe there's the economic incentive where the world is going to produce too much $5 corn, too much $12 beans, and too much $7 wheat. So we have to admit, when you get out to those 22 crops, that they're starting to get some price levels where if you're going to be looking at more than a year in advance, to start laying off some risk and getting some of those prices protected in here. Again, I appreciate you tuning in. If you have any questions, feel free to give us a ring. Also, we look forward to seeing you here next Tuesday. Thank you and have a great day.